Live on Facebook, we got comments already. Hey, Darren, thank you for saying Happy New Year's and Happy New Year to you as well. Where are we here? Live on Facebook, LinkedIn, YouTube, X, Instagram. Hi, Ashley on Instagram. Let's put Ion on pause. I'm going to have a drink with Ion later this week in Toronto, so I'm excited for that. Are we all systems go? Let's go back to comments. Sounds good on Facebook. Thank you, Ashley, for that. Where are we? Welcome, January 6, 2024. We are back. I took a little break for the holidays, and I missed you. I missed you guys. So looking forward to a great 2025. I don't know if I can get my screen sort of centered here in Calgary. I'm traveling all this week, so we're going to do our best to get some shows out throughout the week. 8:30 a.m. Mountain Times, as you recall. That would be episode 318 right now of Mornings with Scott. Welcome to Mornings with Scott, the best damn business show for medium and small businesses on the planet. Is it happening? Is it happening right now? Is Trudeau resigning? He's supposed to have a press conference like right now where he will announce his resignation. Potentially, that's what the rumor is. And so that could be happening. I might be competing with that. The Canadian dollar exploded this morning. The US dollar was dropping because there was a news story out of the Washington Post, I believe, that said, no, tariffs not going to, Trump is not going to put tariffs across the board on different countries. He's going to be more targeted with his tariffs, focused on defense and energy. And that came out of the Washington Post. And what should we, an educated, very sophisticated audience of the best damn business show for medium to small businesses on the planet, what should we think about anything written in the Washington Post? We should be very skeptical, but that was the news this morning. It moved the US dollar. It was dropping globally. And at the same time, the Canadian dollar was skyrocketing because the rumor is Trudeau's going to resign. And all Canadians are thinking, oh, wow, that would be fantastic. I wish that had happened before. And then Trump came out and said, no, that Washington Post story is dead wrong. So that's not going to happen. So the US dollar reverse, this is all happening as I'm trying to prepare and log in this morning. And who knows? Anyways, Trudeau should be resigning right now. The US dollar sort of popped back up, but the Canadian dollar is still strong. And it's going to be an interesting year of change, Darren, in 2025. There's no doubt about that. What are we going to try and cover today? Well, let's see what we get to and what we don't get to. We had a lot of stories rolling into the end of 24, and we're going to try and catch up on some of those today, and then we'll see how the rest of the week unfolds. Right before Christmas, I did I don't want to call it a deep dive, a primer. Can we call it a primer on the insolvency and the bankruptcy protection, the filing of KTM AG? AG is like a Austrian German word for Inc. Like for a corporation. So don't get hung up on the AG thing. But in Austria, KTM, the power sports motorcycle brand, and amongst other things, they own Husqvarna. That's my old school nickname for Husqvarna. They own Husqvarna, they own Gas, they own a bunch of other stuff, and they filed for bankruptcy protection in Austria. And as being a former member and current enthusiast of the motorsports community, and now in the insolvency restructuring business and turnaround business and financing business, I feel like maybe I have some unique insight on this. So I promised on X to do a show, and I delivered on that promise, and it was about an hour long. Go back, I think it was the last episode I did. So if we're on 318, that would have been 317. Ashley can correct me if I'm wrong in the comments, but that would have been December 23. I think you can find it on all the platforms. In particular, you can go to the YouTube channel and look up. You can look up the Winning Momentum podcast and my name, and that's where you will find this content. So anyways, we did that before the holidays. And in there, I talked about what insolvency is, how a restructuring is going to work. And I came to a bunch of conclusions. I came to a number of conclusions for the audience. And some of those conclusions were that this was going to, and by the way, this is not hard and fast. Like, it's a dynamic process. It's an intense negotiation. Nobody, including management, including the court, including the directors of the company, nobody knows where the hell this thing is going to go. That's the nature of the beast. It's one of the reasons I love working in that arena. It's high pressure, it's adrenaline filling, and it moves very quickly. You don't know. You have a general idea of how this is going to unfold. But here's what I concluded is likely the case, that this insolvency will spread to other jurisdictions. It will not be just limited to KTM AG. Probably PR Mobility, the public company that trades in Switzerland, that has a bunch of auto holdings beyond KTM, they will probably be filing and seeking protection as well. Again, I don't have inside information on that. I'm just saying that's what I think is going to be happening. Sorry, I'm just trying to get rid of, there we go, got my Instagram fixed. I think that Pierre himself, the individual that owns this company, the control block, and his CEO, he's going to lose control. That's the conclusion that you'll take from that episode. That racing will be impacted the expense of sponsorship and racing in the motorsports on motorcycles, both supercross, motocross, GPs. That's all going to be impacted. It's a huge expense, so there's no way that they can continue on with that. Fixed contracts can, sponsorship contracts, employee contracts, lease contracts, they can and will be broken in a restructuring situation. That's one of the reasons many companies file, is to get out of contracts that have turned economically negative, and they need to move forward. The announcement from KTM is that this would be a 90-day process in Austria, and while the quote-unquote administration in Austria may in fact be 90 days, if not extended. I don't know if they're allowed to extend in Austria, but the turnaround restructuring itself will be a year to 2 years. That's how long it takes. Nobody gets this done in 90 days. This is going to be long. It's going to be drawn out. It's going to be painful. Well, since I did that show, the company announced that it will be holding on January 27, 2025, a extraordinary meeting of shareholders. And in that meeting, they're going to seek a vote, which I assume they will get, since the two primary shareholders really control this. The minority shareholders are not significant. I went through the share structure of Pure Mobility in that episode, but bottom line is they control everything. These two shareholders being Pierre himself and the partner Bajaj, the Indian automotive manufacturer, one of the largest automotive manufacturers in the world out of India. Well, they control the shares of this thing pretty significantly. And so at the shareholders meeting, they're going to look for approval to change the board of directors. Specifically, I think their chairman is out. He's resigned, and they've brought in a fellow to replace him from Austria who has experience, they say, in restructuring automotive companies. It just tells me more evidence that Pure Mobility AG, the public company, where people seem to be buying shares left, right, and center, that I think that company's going to file as well. I don't see how it can't, since KTM AG as a wholly owned subsidiary is a major part of like, I forget, I said in that episode, I think it was over 90% of the revenue comes from the KPM piece. So that's what they're going to do. And they're also seeking at this shareholder meeting a resolution to issue convertible bonds because they need to raise money. What is a convertible bond? Well, as an investor, if you want to invest and you want to help out KTM, if you want to help KTM and you want to make some money, you think it's a good investment. We talked about debtor in possession lending in the last episode. You can go look that up. I won't cover it again. But you're not just going to go buy shares of Pure Mobility because you're going to get wiped out. And we talked about why that is. Those shareholders are not going to survive very well this process. And so including you buying shares right now, I'm not your financial advisor, but listen to the content here or do your own research, talk to a financial advisor who's accredited in this sort of stuff. But so a convertible bond is like a secured debt. It means you rank ahead of the shareholders and you and you are able to convert, if things are going well, into equity. So you get a little best of both worlds. You get to lend the money, so the company has to pay you back and pay you a fixed return, pay you an interest rate, and that's a lower amount than if the thing is a home run and you own equity. But if the things go bad, you're secured. You rank ahead of existing shareholders. You probably rank ahead of the unsecured creditors, depending on how this thing is structured. And so that's the way they're going to try to raise money, because they desperately need money. A newspaper in Austria, which you may find hard to believe, but I don't actually subscribe to it, Kronen Zeitung, I don't know how to pronounce that, obviously. It said that it was reported in the hearing on December 20th that KTM AG restructuring administrator Peter Vogel presented 3 non-binding offers from potential investors to the regional court. One of them was from Bajaj. Again, I'm not trying to butcher that name. I'd like to treat them with respect. I just legitimately have no idea. Even though I'm in automotive manufacturing, I still don't know how to pronounce Bajaj from India. Anyways, they issued a non-binding term sheet or a letter of intent to, they call it non-binding offers in this article, to lend money to this process to keep KTM afloat and to keep it out of liquidation. CF Moto from China, another strategic partner, they co-produce in a joint venture with this Chinese manufacturer of, I think, electric bikes, motorcycles. I'm not sure what CF Moto does. And then they had a Hong Kong investment company, Fountain Vest, has also shown an interest. Let me ask you a question. These are non-binding offers. If you said to your partner, who's got millions and millions and millions, tens of millions probably into this deal at KTM, if you went to Bajaj and said, hey man, I need from you a non-binding. Don't worry about it. You're not going to get called on it, unless you think it's a good deal. If you get this non-binding letter of intent that says you'd be prepared to finance the company if the insolvency court, bankruptcy court, just help you structure this thing so you're protected, can you issue me this non-binding letter of intent? And if you don't, by the way, we're going to liquidate and you're not going to get any of your money back. Do you think they can get that non-binding term sheet? What if they went to their other partner, CF Moto and China, and said the same thing? I just need this letter. You know what? I drafted it for you. I drafted you this non-binding letter of intent. It's non-binding. That's the key part of this, where you help finance us going forward. And all of a sudden, I've got these couple of non-binding letter of intents from related parties who have a vested interest. Obviously, you're going to get that letter of intent. It does not mean they have financing. It does not mean that. It doesn't mean they don't. It doesn't mean we don't. In fact, my prediction in the original episode on KTM is that Bajaj, however I pronounce that, will be taking over the control one way or the other of Pure Mobility AG. That's my bet on that, and that's what they're trying to do at this general meeting, is to get convertible bonds so they can issue them. And as you might recall, Citibank was hired about 2 days before they filed bankruptcy so that they could go and try to raise money. All right, so there's an update on KTM. It should be an interesting month on that front. Anything on Instagram here? No, I am good. All right, I did a LinkedIn post. I have my personal profile on LinkedIn, where we are live streaming right now. I also have, if you're following me on LinkedIn, go to thescottsinclair.com, and that is the brand. There's now a brand page there, and that is committed to, smaller businesses than my typical Sinclair range. Company where we're doing sort of upper small business, middle market, and even larger middle market, high middle market deals. And that would be financings, restructurings, mergers and acquisitions, business valuation related to a transaction. We do turnaround work, interim executive work, even lending. So that would be the Sinclair range side. Well, the Scott Sinclair is geared towards that smaller business that already exists, or founders, entrepreneurs, students that are looking to perhaps jump into small business and entrepreneurial stuff. That's what that page is geared for. So you should go follow that as well. And there was a LinkedIn post on there recently over the holidays. I don't remember when. And the title was the financial reporting paradox: why cutting back costs more. And the start of that is, for small businesses, financial reporting isn't just a numbers game. It's the foundation of every successful decision you make. High growth businesses often prioritize scaling over structure, while those facing capital constraints see reporting as an expense that they can't afford. This is just the bane of my advisory, not just the advisory practice, but also when we're looking at buying or investing in companies. The accounting sucks in smaller businesses, particularly businesses that are in trouble and don't have the capital, according to the entrepreneur or the leadership of that company, to invest into the reporting and internal controls and all that sort of stuff. And it's just getting worse. It's just getting worse over time. The post goes on to say, but here's the catch: investors and lenders rely almost entirely, they don't know you, they lend entirely on accurate, verifiable financial information. That's what they need. And weak reporting doesn't just go against that and hurt the credibility. From the other side of the table, from the investor's perspective, it actually just raises questions about your leadership. So I see this all the time. And here's my hypothesis for 2025. My hypothesis is that accounting for small businesses has become too complicated. Now, remember, I'm a CPA. I am an accountant. It's become too complicated and too expensive for medium and small businesses, just flat out. And the CPAs themselves, like me, and by the way, I'm a member of an institute of chartered professional accountants in Canada. And, I love the profession. I love my fellow CPAs. But what's happening is everything is so complicated that CPAs and students are spending way more time trying to get up to speed on professional standards. And it's expensive, it's time consuming. And as a result, you need a really high paying job. That sort of mid-market and smaller business CPA who is old and credible and had their green visor shade on. I don't know if they exist anymore. We have a bifurcation, I think. It's polarized, sort of the really great accountants from the Institute and the people that aren't so much up to speed, never have been or never will be. And I'm not trying to degrade anybody and any CPA and either country. I'm not trying to do that at all. As I said, I'm a member of the Institute, and I am a huge supporter of that designation, the training that goes with it, and the value that it provides to medium and small businesses. But I don't think, my hypothesis is, I don't think medium and small businesses they just can't afford it. They can't. If you're a $5 million business, $7 million business, $10 million business, can you pay $125,000 a year salary to a controller that is competent and adds value to your organization, and then more to the two clerks at whatever 40, 50, 60 grand a pop, because the controller is not going to do the data entry? All of a sudden, you've got $150,000, $200,000 of overhead, not including the accounting software, just to do your accounting work. It's a real problem. And so I had a drinks in Calgary, where I am right now, before the holidays with a bunch of lenders that were here for an event, including Toronto lenders, New York lenders. And I asked them that question late one night after a couple of drinks. I said, what do you see with the quality of reporting at your deal size? And some of these lenders are sub 5 million, sub 10 million. Some of them were larger, but people that are lending to exactly this market, what are you seeing for the accounting information? And they're saying it's just horrible. It's increasingly bad. They can't rely on it. They just, and it's causing a real problem for deal flow. And I see this on the advisory side and on the investment side, that you just talk to entrepreneurs and leaders and they've cut back, or they never got the right solution and they don't know what to do. So that's my hypothesis for 2025. New solution, one of mine, a hypothesis, new solutions are needed for this sector. And that could be outsourced accounting, outsourced controllership, CFO services that are outsourced, coaching services that are outsourced. That's what we are doing for small businesses now at Sinclair Range. And we talk about that a lot at the scottsinclair.com. You can go check that out. And the service is a virtual and fractional controllership and part-time CFO. And so I started playing with that model, I don't know, beginning of fall in 2024. We now have a couple of clients signed up for that. It seems to be going well, but it's an interesting space to try and figure out the economic model. How are we adding value? Is it affordable? Is it as cheap as it needs to be? And what are the solutions to that? And then I'm thinking, well, AI, artificial intelligence has to be the answer, right? That's what everybody says. That's what you read. But I don't think that it is, because AI doesn't know if the bagel that you bought this morning is a business expense or a personal expense. That is a human judgment call, and accounting is full of judgment. I don't see how an AI that is built and intended to seek, to recognize, and to repeat patterns, that's what AI is, in effect, right? I don't see how it's going to exercise judgment. If an expense for a widget is, you buy something out of business, just call it a widget, and 50% of the time it's coded to an account, say a customer account, and the other 50% of the time is coded to overhead. Well, how is the AI supposed to know how that works? That's judgment. That takes humans, and I don't see how you automate that. Well, in the news over the holidays, big story in this industry, TechCrunch. The journal talked about bench accounting, which is headquartered out of Vancouver. I think it was originally a U.S. company, but on Friday, December 27, was supposed to be a start of a relaxing holiday weekend, according to TechCrunch, but it was chaos for thousands. And when I say thousands, I think it's later reported that it was 12,000 or so small business owners who used Bench, an accounting tax startup based in Canada that raised $113 million from investors like Bain Capital and Shopify. That morning, they found themselves unable to log into the accounts right as tax season was starting. Bench's entire website went offline. Okay, so you're supposed to be doing your accounting. You're running a small business. You have this outsourced service. You have no backup. You don't have your own data in the cloud, and boom, your outsourced provider is just completely gone. You can't log into the portal. Just imagine that. That is called, by the way, counterparty risk in any deal. I'll conclude on that in a minute, but you can outsource stuff, but you cannot be reliant on anybody. You can't be reliant on Bench Accounting. You can't be reliant on Sinclair Range. You need to have access to your own data, and our engagement letter contract for outsourced accounting services says exactly that. So Bench's hundreds of staff found themselves laid off effectively immediately without any severance or notice. If you're insolvent and you can't make payroll, you have to let people go. And in insolvency law, you're not going to pay severance and you're not going to give notice. That's basically the way that is. So it sucks for the employees, particularly right over the holidays, as they like to say. But that's what happened here. The move was so sudden that one customer who kept years of data on Bench's website and was even at the front page before it went offline. So this person was like a poster child for their marketing, learned of the shutdown only when the journal TechCrunch called them for a reaction. They said, hey, what do you think about having lost all of your accounting data forever? And to which he replied, this Justin Mitros, he says, I was not aware of that. I've never seen anyone shut down like that. That's crazy. So Bench portrayed itself as a tech-forward bookkeeping and tax startup with an intuitive platform that any small or medium-sized business could use. It claimed it had more than 12,000 customers when it shut down. One reason for the company's struggles, according to TechCrunch, was a push to embrace artificial intelligence and other automation tools in recent years. What did I tell you? I don't think AI is going to cut it. In this particular situation. It turns out that it's simpler to automate accounting tasks like It's simpler to automate accounting tasks like categorizing expenses. Maybe remember, is that bagel personal? Is it business? In theory, then in practice, you can't do it in practice through automation. That's my view, and that's exactly what this company, Bench Accounting, experienced. One former employee claimed that the only way Bench could scale was AI, and you need to scale because you have venture capital investors. You can't just have a little business that's providing value to medium to small businesses, generates a decent cash flow. You need growth. And for growth, you either need people or you need to automate. And the holy grail is to automate. But can you really automate in this offering? I don't think so. And so they tried to do that, but they said the execution was flawed and the tools it built didn't work, blah, blah, blah. Over-reliance on these times, sometimes at the expense of human bookkeepers. So there you go, a shift from humans to automation. As I said, small businesses are too chaotic. We used to, when I was training to be an accountant, you would be put on the small business desk, and you'd have all these entrepreneurs from back in the day, I'm talking decades ago, show up with what they call in the accounting business the shoebox. So they literally have an old shoebox, and in there would be bank statements, hard copies of receipts, because you didn't have digital back then. And as an accountant, you had to go and sort of make financial statements up once a year for tax purposes out of the shoebox. It's chaotic. It's chaotic. Stuff isn't coded properly. It's really creates more work for the entrepreneur to make sure that at the front end, you code everything properly and record everything properly for an AI automated system to even work. There's zero chance that an automated AI system could just sync with your online bank statements and come up with they can come up with financial statements, but they're going to be crap. They're not going to be good. And when they're not good, they're going to be wrong. And when times are good, it's not going to matter. But when times are bad, you're going to have bad financial information. You're not going to be able to make decisions, and investors won't invest in you. They won't lend to you. The delays, over-reliance on these tools cause them to pass around these books of records to different bookkeeping teams that Bench Accounting had, and they didn't deliver financial statements. And one former employee told TechCrunch that some of the customers were still waiting for their 2023 books in September 2024. Okay, so your 2023, if you have a December 31 year end, I've asked my team to prepare all my statements by January 10 for 2024. That's the expectation. Maybe you can slide to the 15th, maybe you can slide to the 20th, but not longer. If you're sliding longer, it means you're not keeping up with your financial statements. Well, in September 24, this well-paid, we'll talk about the well-paid part, but this external outsourced accounting service is not delivering financial statements. And by the way, maybe it was Darren I was talking to, I'm not sure, but I know that local small businesses that I talk to sometimes, they outsource to a manual bookkeeping service in their local community. And they don't get their stuff on time either. Nobody is getting their financial information accurately and on time when it's outsourced. And so that's a problem. I'm not saying nobody, there's probably good services, but it's hard to do that. And you also can't afford to pay a decent accountant internally. And I'm not, these are generic statements. I'm not with a broad brush saying that about everybody as well. According to the former staffers, Bench went through multiple rounds of layoffs starting in 2022. This is as they were transitioning to artificial intelligence, and that all went downhill. What else do we have to? Let's just cut this off because I'm going to be running out of time. So there's a side story associated with Bench Accounting, which is kind of cool, is that the former CEO and the founder, a guy with the last name Crosby, he put a post on LinkedIn. He says, I hope the story of Bench goes on to become a warning for VCs that they think they can upgrade a company by replacing the founder. It never works. Of course it works sometimes, but you do lose that vision. So this guy was ousted by the VC. He doesn't say for what. Was it a dispute over growth expectations? Was it a dispute over not wanting to go into artificial intelligence and to keep the people? I don't know what that dispute was because he doesn't tell us, but it's interesting. By the way, this company suffered a lot of pressure from its senior lender, which was Research Bank of Montreal, BMO Technology and Innovation Banking Group. So they claimed that they just had to shut down because they had demands and the receiver was going to come in from BMO. So, by the way, we don't need to get into the details, but they have, maybe we'll cover that in a subsequent episode, but they do have a buyer. They have a buyer for this business. And if that all works, and if it actually closes, then the accounts are going to be rescued. What are the lessons here for us? Counterparty risk, you cannot. Counterparty is the people you've outsourced your stuff to. You cannot do that in your business without having access to your stuff. If you're outsourcing your bookkeeping, you need to have all of your data all of the time, backed up locally, backed up on a cloud, backed up somewhere. So if your counterparty disappears, you can go to somebody else, say, yeah, here's all the data, let's get back to work, right? You have to do that. If you're manufacturing in China, you need to figure out how to have ownership of your tools. Now, it's not practical. You're not going to go and collect your tools personally from China and bring them back, but you can't. I'm selling a company right now, and we don't have the tooling for the manufacturer. I don't know if we're ever going to get it. And so it's a problem. When you're dealing with outsourcing of stuff, you need to get your arms around everything that's critical to your business, assuming that counterparty disappears. So your counterparty risk is a good lesson for us in 2025 on that. And the bookkeeping accounting problem is a real issue. I think Sinclair Range has a solution for you, but I had somebody research the bench accounting product offering. And so what they are offering for basic bookkeeping and tax preparation services was an annual plan that came out to $300 a month. If you were just on the monthly, it was $350 a month. Okay. So that's not a lot of money for your business. You have $1 million or $2 million business. I assume it could scale from there if your business was more complicated, but that was the marketing pitch. Was it, let's call it $300 a month. If you pay a bookkeeper, if I pay a bookkeeper, say $50,000 a year, that breaks down roughly into what? $25 an hour, right? So in this professional services business, the rule of thumb, and it's just a rule of thumb, everything changes, but you think of, they talk about a third. So a third of your revenue goes to cover the salary of the people doing the work, in this case, the $25 an hour. A third of your revenue goes to cover your overhead, your office space, your telecommunications, internet access, computers, software, all this sort of, which there's a lot in accounting. Okay. And then a third is left over for profit. Now that's, again, a rule of thumb, but a third. And it kind of works out that way in big professional firms. And so $25 per hour, if that's my $50,000 accountant, I need revenue from that person of times 3. So $75 an hour. And if I'm charging you $300 a month, that means there's 4 hours per month to do your work. Now, in $1 million company, in a $500,000 revenue per annum company, probably 4 hours is fine, but it's not fine for a $5 million revenue company or a $10 million revenue company. And so it's not going to work. That's the problem. Don't be cheap. Invest in your accounting. That is the financial paradox, as my LinkedIn post said. You need to do that. Okay, running out of time, just really quickly, U.S. Steel. Actually, you know what? We're going to postpone that. We're going to talk about that next episode because I don't want to start the year going too long. This has been Mornings with Scott, the best damn business show for medium and small size businesses on the planet. As I said, I'm traveling this week. I'm heading to Toronto later this afternoon. I assume I can get a show out for you in the morning, but if I miss you, you'll know why. And I'll put some announcements on LinkedIn and X, as I always do. Thank you, everybody. Any more comments I need to jump on? No, I'm good. Talk to you tomorrow. Bye.